Today I want to share information with you that we got from Freddie Mac at our corporate event. It was some awesome information in regards to millennials and how they're approaching the mortgage real estate market. So I'm going to share some awesome details that you may not have known or heard about. If you like the information I'm sharing, leave me a comment or a like. Make sure you subscribe if you want to follow me on social media. Love to share some more information regarding mortgage finance and real estate and financial coaching. So hope to see you there. Let me go ahead and share with you my slides that we got from Freddie Mac at our corporate meeting about millennials. So obviously Freddie Mac was talking to us a little bit about mortgage interest rates. And we all know mortgage rates have been going up from last year. Now, they did calm down here recently when we got the recent CPI data for the month of October, which was really nice. But overall, you can see a downward trend until 2021. And we see this big, sharp increase, highest rates we've seen in the past 20 years. I know it's been ingrained in our heads. It's all over the media and everything else. But, I want you guys to take a look at how far down we've come. Now, I started mortgage lending in 1998, and believe it or not, the best rate I had during this time was 13%, 12.99. I worked at a subprime mortgage company called Household Finance. They're no longer around, but back in those days, they were a 200-year-old finance company. And they did subprime loans, meaning loans for people that had less than stellar credit, and they couldn't qualify for traditional mortgages. Now, home prices did grow by 17% in June, according to Freddie Mac's data. Obviously, some pockets are currently seeing some different information, especially now as we approach the end of the year. But this kind of gives you an overall view of what is going on in the United States for house prices. I do realize in some areas and locations we're seeing home price drops, concessions from sellers, a lot of different stuff going on as we're going into these higher interest rate environments that we're in currently. But let me know what's going on in your neck of the woods. I'd love to hear from real estate agents and mortgage lenders and just people, CPAs, insurance agents all across the country that give me some awesome details, and it's very different on the information that we're getting from place to place. Next, let's talk about millennials. They are the most educated adult generation thus far. 40% of millennials have a bachelor's degree or higher, and comparing that with just 29% of Gen Xers and 28% of baby boomers. So they are very educated. And you can see on this map where they have chosen to reside. Most of them are over here in the Northeast and Mid-Atlantic regions. And next up, we have student loan debt. Freddie Mac was really trying to drill into us that the concerns millennials have is regarding not only down payment, thinking that they have to have 20% down, but also in regards to their student loan debt. A lot of millennials have a sense that they carry too much debt and that they would not be able to qualify for a mortgage because of that. So let's take a look at this information here. Millennial student number breakdown. 32% is the millennial share of the total U.S. student debt that's outstanding. As a total of $501 billion, the average debt per borrower for millennials is $34,000. And if you're a mortgage lender, you're going to be saying what I say, like, that's not a lot. Obviously, we do see sometimes, people that carry way more than that, but this is the average debt per borrower. And here are your monthly payments on that student loan debt for a total of 5.5% of their take-home income. Now, this is something, again, that Freddie Mac really wanted us to educate millennials on, that we have a lot of programs that are available. If you're somewhere in this average, and even if you're a little bit higher, there are programs that are here to help you qualify for a home loan. And no, there are a lot of programs out there where you do not need 80%. There's programs out there for millennials with just 3% down. We have down payment assistance programs where you don't have to put sometimes any money down. Okay, there's a lot of different programs out there. So reach out to us or reach out to your professional if you're watching this and you want to know, can I qualify, and you feel like your student loan debt is something that's been holding you back. And also, being that millennials are well educated, we assume automatically, or at least I did, that they're going to also be earning their fair share of income. So we can definitely see that here in comparison to the baby boomers and Gen Xers, that millennials are definitely earning more in income. They also make up the largest share in the gig economy, 40%. So there's 68 million people that are independent workers in the gig economy. And, millennials are making up the largest share. Uh, we also have programs as well if you're a gig worker to help you qualify. Don't feel like you cannot qualify for a home loan, or you can't attempt to see if you can get pre-qualified just because of that. So reach out to me. I'd love to try to help you and let you know of some of the awesome programs we have. In the past 2 years, more than half of all purchase mortgages were issued to millennials. So this blew my mind. I had no idea at all until this slide came out of how many millennials are out there looking to purchase homes. You can see the upward trend here in 2020. The data shows over half, 52% of purchase mortgages that were done by Freddie Mac or bought by Freddie Mac, because they don't do loans, were to millennials. Isn't this amazing, right? If you, maybe you knew this, but I didn't. I was shocked. Unbelievable. I had no clue that many millennials were out now purchasing a home. And that's why, again, we need to get this data out there and help them. So Freddie Mac gave us mortgage ready information. Okay, this is a status for potential future borrowers ages 45 and younger who are showing characteristics on their credit that could qualify them for a mortgage. And here's their definition of mortgage ready, near mortgage ready, and not currently mortgage ready. The data shows this, that there are 41.1 million mortgage ready borrowers in the overall population. Isn't that amazing? A lot of people that are ready to purchase. Now, obviously, we know a lot of people are waiting because of the housing market to see what's going to happen with interest rates, to see if people think values are going to crash. But I can tell you this. There are people that are ready, right? There are people that are paying a high amount of rent, and it would be better for them to buy. I tell people this, look, it's everyone's situation is different, not one across the board. It's not how some people are, advertising everybody should buy. It's a great time to buy. I think every situation is different, and we need to take a look at that and make sense of everything. Take a look at your financial profile, see exactly where it is that you're looking to buy, so on and so forth. So anyways, I hope this information really helped you in regards to what millennials are doing and some of the information that Freddie Mac shared with us. Make sure you like, comment, subscribe, follow me. I look to continue to bring you some awesome information as I receive it that could potentially help you. And if you're a millennial out there, you're thinking about buying, whether it's now or in the future, make sure you reach out if you need some help. I'd be more than happy to help you and your loved ones when it comes to mortgage loans and real estate. Take care.